Ever wondered why Bitcoin has become such a hot topic in the investment world? Well, strap in, because we're about to embark on a journey to understand just that. Bitcoin, a digital currency or cryptocurrency, has been on a roller coaster ride since its inception in 2009. It was the brainchild of an anonymous entity known as Satoshi Nakamoto, who envisioned a decentralized form of currency that would revolutionize the world of finance. And boy, has it done that. From its humble beginnings, Bitcoin has skyrocketed in popularity, not just among tech-savvy individuals, but also among investors. Early adopters who were brave enough to take a chance on this novel concept have seen significant returns. Imagine being one of those lucky few who bought Bitcoin for mere pennies and watched it soar to heights of nearly $60,000. It's akin to stumbling upon a treasure chest in your backyard. But it's not all rainbows and unicorns. The world of Bitcoin is rife with volatility. Prices can swing wildly in a matter of hours, making it a high-risk, high-reward investment. This volatility has been both a blessing and a curse. On one hand, it has attracted thrill seekers and speculators looking to make a quick buck. On the other hand, it has deterred more conservative investors who prefer stability and predictability. Despite its volatility, Bitcoin has managed to carve a niche for itself in the investment world. Its digital nature, scarcity, and potential for high returns have made it an attractive asset. It's like a shiny new toy that everyone wants to get their hands on, sparking a global frenzy. So, what's the hype all about? It's about the promise of high returns, the thrill of the unknown, the allure of a digital gold rush. It's about the potential to disrupt traditional financial systems and the power to democratize wealth. It's about a revolution in the world of finance. So now that we understand the hype around Bitcoin, let's dig deeper into its role as digital gold. But how does Bitcoin stack up against the time-tested investment vehicle, gold? Well, let's start with scarcity. Both Bitcoin and gold are limited resources. Gold is mined from the earth, and Bitcoin, in a way, is also mined, but digitally. The key difference here is that while we don't know exactly how much gold is left to be mined, we do know that there will only ever be 21 million Bitcoins. Moving on to durability. Gold, as a physical asset, can withstand the test of time. It doesn't corrode or decay. Bitcoin, on the other hand, is a digital asset. Its durability is tied to the robustness of the blockchain technology it's built on. While it's virtually indestructible in the digital realm, it could be lost if, for example, you forget your digital wallet's password. Next up is divisibility. Here, Bitcoin shines. One Bitcoin can be divided into 100 million units, called satoshis. This level of divisibility allows for microtransactions, something gold struggles with. After all, you can't exactly go around slicing and dicing a gold bar. When it comes to transferability, Bitcoin again has the edge. Being a digital asset, it can be sent across the world in a matter of minutes. Gold, being a physical asset, requires costly and time-consuming shipping, not to mention the risk of theft. Now, in terms of market capitalization, Bitcoin has recently surpassed gold, a significant milestone. However, this doesn't imply Bitcoin is better than gold. It's a reflection of the growing acceptance of Bitcoin as a store of value. But let's not forget about the risks. Both Bitcoin and gold are subject to market volatility. Bitcoin, however, is significantly more volatile, with its price known to swing wildly in short periods. Gold, in contrast, is often seen as a safe haven during times of economic instability. In the realm of regulation and acceptance, gold has centuries of history, while Bitcoin is still in its nascent stage and subject to regulatory uncertainties. As we can see, Bitcoin and gold have their own unique features and risks. But what makes Bitcoin a potential digital gold? Is Bitcoin truly the digital gold of the 21st century? This is a question that's been on the minds of many, particularly in the investment world. Let's delve into the argument for Bitcoin as digital gold and explore its potential as a store of value similar to gold. Firstly, why is Bitcoin often compared to gold? The answer lies in its unique properties. Like gold, Bitcoin is finite. There will only ever be 21 million Bitcoins in existence, which mirrors the limited supply of gold. This scarcity helps to maintain value over time, making it a potential hedge against inflation. Just as gold has been a reliable store of value for centuries, Bitcoin's digital nature and global accessibility also position it as a potential store of value. It's not bound by physical borders or traditional banking hours, and it doesn't require physical storage. These properties make Bitcoin uniquely suited for the digital age. However, it's important to note that Bitcoin has not yet reached the level of acceptance and stability that gold enjoys. While Bitcoin has seen a meteoric rise in value and popularity, it still faces significant hurdles. These include regulatory challenges, technological risks, and extreme price volatility. For Bitcoin to truly become digital gold, it must overcome these obstacles and gain more widespread acceptance. It must become a universally accepted medium of exchange and a stable store of value. This is not an easy feat, and it's uncertain whether Bitcoin will ever reach this status. Bitcoin also lacks the historical track record of gold. Gold has been a trusted store of value for thousands of years, while Bitcoin has only been around for a little over a decade. This lack of historical precedence adds an element of uncertainty to Bitcoin's future as digital gold. Despite these challenges, Bitcoin's potential cannot be dismissed. As technology continues to evolve and digital currencies become more ingrained in our everyday lives, Bitcoin could very well carve out a niche as the digital gold of the 21st century. Bitcoin has a long way to go before it becomes the digital gold, but it does have potential. So, what role does Bitcoin play in investment portfolios? Well, Bitcoin, being the first and most popular form of cryptocurrency, presents an intriguing prospect for diversifying investment portfolios. Traditional portfolios comprise of assets like stocks, bonds, and commodities. However, in recent years, the digital world of cryptocurrency has emerged as a new and exciting frontier. The allure of Bitcoin in an investment portfolio lies in its potential for high returns. To illustrate, let's take a look back. If you had purchased Bitcoin in its early days, when it was worth just a few cents and held on to it, your returns today would be astronomical. Even in the past few years, Bitcoin has shown significant growth, often outpacing traditional investments. However, with high returns come high risks. Bitcoin's volatility is a double-edged sword. On one hand, it can lead to significant profits. On the other, it can result in substantial losses. This volatility is driven by a variety of factors, including regulatory news, market sentiment, and technological changes. These factors can cause drastic swings in Bitcoin's value, which can be nerve-wracking for investors. Furthermore, the lack of regulation and the potential for security breaches in the cryptocurrency market also pose considerable risks. While the blockchain technology behind Bitcoin is secure, exchanges where Bitcoin is traded can be vulnerable to hacking. This has led to instances where investors have lost their entire investment. Now, what do investment professionals think about including Bitcoin in a portfolio? Opinions are mixed. Some financial experts view Bitcoin as a speculative asset rather than a viable investment. They caution against the unpredictability and potential bubble nature of Bitcoin. However, others see value in its potential for high returns and its use as a hedge against traditional market downturns. In conclusion, Bitcoin can serve as a unique tool for diversifying an investment portfolio, offering potential for high returns. However, it is crucial for investors to be aware of the significant risks associated with it. As with any investment, due diligence, careful analysis, and risk management are paramount. While Bitcoin can potentially add value to an investment portfolio, it also comes with significant risks. So let's recap what we've learned about Bitcoin as digital gold. We delved into the hype surrounding Bitcoin, understanding how it's not just another passing fad, but a digital revolution that has shaken up the financial ecosystem. We saw how Bitcoin, akin to gold, has become a store of value, a safe haven asset that investors turn to during economic uncertainty. We also embarked on a comparative analysis, stacking Bitcoin against traditional assets like stocks, bonds, and gold. The results were quite revealing. While the volatility of Bitcoin is higher, the potential returns and its lack of correlation to traditional markets make it a compelling addition to diversify an investment portfolio. Then, we analyzed Bitcoin as digital gold. We discovered that it shares many properties with gold: scarcity, durability, and fungibility, but surpasses gold in aspects like divisibility, portability, and verifiability. This makes Bitcoin not just a digital version of gold, but in many ways an improved version. We also looked into the role of Bitcoin in investment portfolios. The past decade has seen Bitcoin moving from the fringes of the investment world to becoming a serious consideration for mainstream investors. It's not just for the tech-savvy anymore. Financial advisors, hedge funds, and even pension funds are starting to include Bitcoin in their portfolios. This is largely due to its potential for high returns and its ability to serve as a hedge against inflation and financial crises. In conclusion, Bitcoin as digital gold has the potential to play a significant role in investment portfolios. However, it's important to bear in mind that, like any investment, it comes with its own set of risks. It's thus crucial to do your own research and perhaps seek professional advice before diving in. Whether or not Bitcoin becomes the digital gold of the 21st century, one thing is clear: it has made a significant impact on the world of investing.